Welcome to The Deep Dive, your way to quickly get smart on complex topics. Today, we're diving into something that's really making waves, particularly in, let's say, high-stakes financial tech circles. That's Metallicus A-Chain and its partner system, Pulse VM. Now, we've pulled together quite a range of sources, technical papers, recent updates to really give you the clearest view. And just to be clear, this isn't your typical broad blockchain chat. Nope, we're talking about something very specific, built with institutions, like banks, firmly in mind.
Exactly. Our goal here is simple. Boil down all this info, pull out the key stuff, so you, listening, can really get what A-Chain is about.
Yeah.
Why it's significant, especially, with everything changing so fast in digital finance and this big push for banks and institutions to get involved.
Yeah, I'm really curious about that positioning because you hear banking-grade virtual machine and, well, it just sounds different, doesn't it? Different from the more general tech a lot of us know in crypto, like, say, Ethereum's EVM, which, runs tons of apps. So what makes something truly banking-grade? How does that design choice really set it apart? What problem is it solving that others aren't?
Okay, so we've touched on A-Chain being specialized, but for anyone just tuning in, what is Metallicus A-Chain? Fundamentally, what are we talking about?
Okay, so at its core, A-Chain is a Rust-based virtual machine environment, a VM. It's built by Metallicus. And here's the really crucial part. It's designed specifically, from the absolute ground up, for banking and stablecoin tasks.
Ah, okay.
That makes it fundamentally different from those general-purpose VMs you mentioned, which, yeah, they're built to handle almost anything. A-Chain isn't trying to do everything. Its mission, its whole point, is to be institution-grade.
Institution-grade, meaning performance, compliance, rock-solid reliability. Those aren't just nice-to-haves. They are absolutely central, baked right into its DNA, you could say.
Okay, I get it. So given that a lot of blockchain tech is general purpose, what's the thinking there? The advantage, maybe? Or is there a risk in being so specialized just for finance?
That's a really good point. See, general purpose chains, they've shown they can do a lot, no question. But the financial world, it has these unique, totally non-negotiable needs. Security, speed, fitting into existing rules.
Right, compliance.
Exactly. So this shift towards specialized platforms like A-Chain, it kind of signals the space is maturing, It suggests that big players adopting this tech aren't just thinking, let's use blockchain. They're thinking, we need purpose-built, secure tools for our specific industry needs.
So less tech for tech's sake.
Precisely. It's a practical move, solving real specific financial problems accurately. And our sources, well, they back this up. There's a news update from August 31st, 2025, saying A-Chain with Pulse VM is getting closer to production. And it specifically calls it that banking-grade VM for stablecoins and institutional DeFi. Clearly one of Metallicus's biggest tech pushes. It shows real progress towards that specialized system finance needs.
That definitely clears up the why, the reason for this tight focus. Okay, let's shift gears a bit to the how. How does A-Chain actually deliver on that promise of top-tier performance and reliability for institutions? What's under the hood, driving it?
Okay, yeah, the how. That really brings us to Pulse VM. Pulse VM is basically the engine, the heart of A-Chain. It's a high-performance VM, but it's been fine-tuned specifically for financial jobs.
Fine-tuned how?
Well, unlike more generic VMs, Pulse VM is optimized for very precise things. Think about issuing stablecoins, handling those transaction workflows.
Yeah.
Or think about the sheer volume and speed needed for core banking stuff. High volume, low latency.
Right, things need to be instant.
Exactly. And it's built with this relentless focus on institutional reliability. That means things like redundancy, so it keeps running no matter what, comprehensive audit trail so everything's traceable, and a whole set of compliance tools built right in. It's not an afterthought. It's designed in from square one.
Okay, so if maybe other VMs are like, I don't know, general purpose cargo trucks that can haul anything, Pulse VM sounds more like a specialized armored truck, built just for finance, for moving valuable stuff quickly and super securely.
That's actually a great analogy,
Yeah.
Armored transport, it captures that specific purpose perfectly. And speaking of purpose-built, that specialization goes right down to the foundations, doesn't it? The choice of Rust as the programming language.
Yeah.
How does that help with security and reliability?
Yes, exactly. Tell us about Rust.
Right, Rust. That choice is incredibly important too. It wasn't arbitrary. Rust was picked for a few key reasons, and these aren't just tech jargon. They have real-world impact in finance. First, it has inherent memory safety. That drastically cuts down on certain types of bugs and vulnerabilities.
The kind that lead to big problems, exploits.
Exactly. Catastrophic financial exploits or system crashes. Absolutely critical when you're dealing with, potentially billions of dollars in sensitive data. Second, its performance is just superior. It can handle the massive number of transactions a big bank needs to process, like every second, in real time. No choking.
Okay.
And third, its handling of concurrency, running many things at once, is very secure. This means multiple complex financial operations can happen simultaneously without messing each other up, without data errors. That gives you the kind of solid reliability banking demands. What's really striking is how these deep architectural choices, the language, the VM tuning, directly tackle those core security and performance needs of finance right from the beginning.
So with this really solid, specialized foundation in place, what can banks and financial institutions actually do with HChain? What are the practical features that make it genuinely banking ready, in the real world, not just in theory?
Well, they're already doing things. The sources show Metallicus has already deployed a native token contract pulse token using their own tools, their SDK. And this isn't just like a demo, it's proof the whole smart contract lifecycle works.
The whole life cycle.
Yeah, end-to-end validation, from deploying it to running it to seriously testing its performance. Think of it like taking a new race car from the design phase all the way to the track and proving it performs under pressure. Not just saying it will.
Gotcha. That kind of proof is vital for banks, I imagine.
Absolutely essential. They need total certainty that things will work reliably, securely, predictably under real-world stress. So their focus now is building out that smart contract support even more and just constantly testing it for that institutional level reliability, pushing it towards wider use. And then you look at the specific banking-ready features, and it gets even clearer how practical HChain is for, well, traditional finance. First, there's native support for stablecoin issuance. Specifically, branded ones backed one-to-one by US dollars. That's key for regulated digital money that needs trust.
Okay, stablecoins, that makes sense. What else?
Second, interoperability. Huge deal. It's designed to connect smoothly with existing core banking systems. The big mainframes and software banks already use, and also with instant payment systems like FedNow here in the US.
So it connects to the old and the new rails.
Exactly. Banks can't just throw out everything overnight. New tech needs to work with what's there. And maybe the biggest piece, regulatory alignment, it's built right into its core. HChain is designed thinking specifically about strict compliance rules, like ISO 2022, that's a global standard for financial messages. Also, the Bank Secrecy Act, BSA, and KYC-AML, Know Your Customer, anti-money laundering stuff.
Wow, okay.
This ensures it meets those tough legal and operational standards right out of the box.
That really does demonstrate a practical approach, doesn't it? Not just abstract ideas about compliance, but actually building it in and linking it to the systems banks already use. It feels like creating a solid, secure bridge rather than some totally separate, isolated tech island. You often hear about regulatory fear holding back crypto adoption in finance. Is HChain basically trying to build that safe harbor, the kind regulators want, making it easier for banks to step in?
That's a really sharp way to put it. Yeah, absolutely. By embedding these standards and focusing on integration, HChain is aiming to cut down that regulatory friction, those operational hurdles that have slowed things down. It's about offering a clearer, compliant path forward instead of asking institutions to navigate, murky waters on their own. That proactive approach is a big part of its appeal to traditional finance.
Okay, so bringing it back, what does all this mean for you listening right now, trying to stay informed about where finance is heading? Why should someone who isn't running a bank care about a specialized financial VM like HChain?
Yeah, great question. It connects to the bigger picture, the trends in financial tech that eventually touch everyone. What HChain represents is this clear shift, this strategic move from general blockchain platforms to really specialized ones. Unlike, say, EVM or WASMA, which handle all sorts of apps, HChain is tailor-made for finance, for these emerging digital banking networks, TDBN. That focus makes it uniquely capable of meeting the super-specific high-stakes needs of finance, needs that a general system might struggle with, and performance that directly impacts you too. HChain's intense focus on speed, low latency, high throughput. That's crucial. Think about the sheer number of payments, trades, updates a big bank network handles every second. It has to be instant and reliable.
For everyone involved, not just the bank.
Exactly. For every person, every business using the services. It's the foundation for reliable, real-time banking that we all depend on daily. And looking ahead, HChain wants to be a central hub. It's designed as the execution layer, where banks, credit unions, fintechs will run their financial smart contracts. where they'll issue regulated stablecoins, manage tokenized assets like deposits. It's really shaping the underlying plumbing of future financial services, how loans work, how digital money moves securely.
That really provides a full view. And, the summary from the source material nails it pretty concisely. In a nutshell, A-Chain is a Rust-powered banking-optimized VM with Pulse VM, offering native stablecoin capabilities, built-in compliance, and an institutional-grade architecture. That sums it up very clearly. A compelling pitch for its target audience, and really for anyone thinking about the secure digital future of finance. Well, that was quite the journey through Metallicus A-Chain. We've really unpacked its specialized nature, the power behind Pulse VM and Rust, and those practical, banking-ready features that focus on compliance and integration. It's definitely clear this isn't just another tech project. It seems strategically positioned as a potential future hub for financial innovation, built with the tough realities of global finance right at its core.
And maybe this deep dive leaves you, our listener, with a thought to chew on. As digital assets and traditional finance keep getting closer, how vital will these super specialized institution-focused platforms like A-Chain actually become? And maybe more personally, what could that mean for the security, the speed, even just the basic feel of your own financial life and the trust involved in the years ahead?
Something to definitely think about. Thanks for joining us on this insightful deep dive today. We hope you'll keep exploring these fascinating points where technology and finance meet. Until next time.